Did you know that when buying a home, a seller can actually cover a good portion of your closing costs? Your closing costs on a loan consists of your lender fees, your attorney fees, taxes that you pay at closing, homeowners insurance that you pay at closing, and sometimes there are others, like if you're buying down your interest rate, or you may have HOA or condo fees that you pay at closing. These fees can add up pretty quick, and then you've got your down payment that you pay at closing as well. The good thing is, though, each loan type allows a certain percentage of those closing costs to be covered by the seller. For example, if you're doing an FHA loan, you can technically ask for up to 6% of your purchase price amount from your seller. Doesn't mean your seller is going to give you that high of seller credit, but it's the max that you can ask. If you did, that's typically going to cover all of your closing costs. Sometimes your realtor will ask us as a lender what the closing costs currently are. That way they can try to ask for that specific amount or pretty close to it. Other loans, like conventional loans, only allow sellers to give you 3% in that credit if you're putting less than 10% down, or if you're putting more than 10% down, you can ask for 6%. Still a good amount to cover towards your closing costs, or maybe all of your closing costs. You and your realtor negotiating for a seller credit can be an amazing way to lower those closing costs and lower what you bring to the table. What a seller credit cannot cover, though, is your down payment. Your down payment is always your responsibility. So that's going to come from your own funds, checking, savings, 401k, stocks, bonds, or from a gift fund from an immediate family member typically. But other than that, your traditional closing costs can typically be covered by seller credit if you're able to negotiate one. If you have any questions, let me know.